Hey guys, it's Ant-Man here. I'm coming at you with another video recap, and I'm also going to be talking about a couple of plays that I'm possibly going to be looking at for the morning. So let's get right into it. First off, I haven't made a video in a couple of weeks, I believe, and it does feel good to be back on mic. I've just been so bogged down with just stuff in work and personal life and my new PC build, which I will be doing a video on as well. Had a couple issues with it. Once again, just a special shout out. Thanks to member Nuke in the room. Thank you for your help on that. That was much appreciated. Your help probably saved me days of frustrating research and trial and error and stress and headache. So thanks, man. I appreciate that. And yeah, it's just been a lot of stuff going on, so I really just haven't had a lot of time to dedicate to making these videos. And I do have a list of videos that I want to get done, get out there for you guys, content I want to share. So I do apologize for taking so long to get one up. But like I said, I've been very busy, and I will definitely try to be more consistent in uploading content going forward. So let's get into the trade recap for today. Let's start with the morning gap scanner. This morning was pretty quiet, actually. When I signed on, I only saw about a dozen or so. It was a very quiet morning here. I'm not going to get into the process of how I narrowed it down right now because of time constraints, but I did narrow my list here down to BG and SWKS. And ultimately, I did take a trade in BG today. Let's take a first look at SWKS, and let's see what SWKS did today. And this one actually set up really nice. Ramped right out of the gate, which is what I like to see. Came into a daily resistance level here, put in a beautiful inverted hammer, and started to consolidate the VWAP and ultimately fail. And this is just what I look for trades according to my strategy. And if I did take the trade in Skyworks, this would have been actually a really nice trade. But I did take the trade in Bunge or Bunge or Bungie, however you want to pronounce it. And I had a few levels here marked from the daily chart as well. What I did on this trade here, let me get zoomed in for you. I saw this huge power candle here right before the open. And these are 5-minute candles, just so you're aware. I do use the 5-minute chart quite often. Put in this seller's candle here on the 5-minute chart, so that's when I became interested in this play here. Second candle opened up very strong bullish candle. And what I actually ended up doing is, if I go down to the 1-minute time frame, you'll see where my entry was on this. I actually got a really nice entry. I'm very happy with how this trade worked out. My entry, my management through the trade, and my exit. This is one of the better trades I've had in a long time. As some of you guys may know, I've just been on a bit of a red streak. It is what it is. But I'm taking steps to minimize my risk and minimize my exposure, which I advise anyone that's having a hard time or a little bit of a red streak to do. Something like a stock like Bunge at 62 and change, I would have, without batting an eye, hammered it with 1,000 shares, and it would have been an amazing trade if I did so. However, right now I'm only taking 200 to 300 shares, which I am downsized to about a quarter size because of the red streak that I've been on. I had a 21-day green streak, followed up by a 10 or 11-day stretch where I only had, not including today, I only had one green day, 3 break-even days, and the other 7 were all red. So, I had to put the brakes on a little bit, had to reevaluate things, had to see what's going on. It is just it's a crazy market right now, and I will say that the market probably does have something to do with it, because not every strategy works in every market. So for the time being, I'm just sizing down, and I'm just being even more cautious with the trades that I'm taking. So that said, right here on the 1 minute chart, we can see right here how it's starting. It put in this engulfing pattern right here. And then right around the 62.12, which is not far from the whole number of 62, it started to fail, and that's right where I got in, right between. I tried to get in at 62.12, and I believe it got filled somewhere around 62.06 or 62.07. Either way, it was a really, really nice entry. I probably could have gotten in a little bit higher up here, maybe mid candle on here. Maybe when it broke the close of this candle here to have a little bit less risk on the play. But in any case, I was risking off the $half up here at 62.50, so I still only had about 40 cents of risk. If I got it up here, I mean, I would have probably only had about 20 cents of risk, but in any event, I was sized down enough where it was a loss that would have really not been anything had it gone against me. So I got in with 200 shares, and I just kind of let it sit and work. I felt confident in the trade, had conviction in the setup, and I kind of just let it work here. And on this first wash here, I covered a good part of it, and then I just small consolidation here, and then through this wash here, I covered all but 20 shares. And I just let it work. And when I saw it consolidating right here around this level of support and popping up, my emotions got the better of me, and I covered my remaining 20 shares. In hindsight, which is 2020, as everyone knows, I probably should have just let them run, because I had made all this in profit, so there was no really reason for me to take this off, which is something I am working on. But even if I did let my other 20 shares run, it did have another little sell-off here, another little pullback, and then a sell-off again. But overall, quite happy with a small green trade, quite happy with my entry, my management, and I'm happy with my exit. I could have held a little longer, but overall, I did catch the meat of the move. To catch point and a half, point 70 on a $60 stock, I'm very happy with. And like I was, saying the other day, at this point, because of the red, it's not about the profit. This could have easily been a $1,000 or $2,000 trade, but it's not about that right now. It's about getting back into the groove of things. It's about getting this red streak over with and put behind me, and back on the green train. So that was the only trade I took today. I kept it very, very light, very conservative, and that's how I'm gonna play it going forward, especially with the market that it is, and the market that I think we're gonna be coming into the end of this year and into the next year. So I'm gonna be playing it very conservative, very close to the chest, and if I'm only having $70 or $100 days, they're green, and I'm not complaining. And those bigger P&L days will come in the future. So on to that was the trade in BG today. And now what I want to do is go over a couple of plays that I came across tonight that I will be looking at in the morning. There's no guarantee that these are going to make my final watch list. However, I will reevaluate these couple of tickers in the morning once I have my gap scan populated, and I can really compare what I'm looking at to take into the bell. So first one is THO. Isn't that a big candle? So what we have here. You can see this is a stock that's just been on the schneid, just downtrending like a mofo for the past 52 weeks, 1 year. And there's a few levels of interest right here that, as you can see, do go way back to 2016. They do hold true in 2016, and then these same levels are being retested over here. So let's get you guys pulled in closer. And depending on what the market does in the morning, Right now, the futures, it's not to get off topic, but the futures right now on... Oops, no, I didn't mean to do that. Meant to do that. The futures, as you can see, we'll look on the 5-minute time frame. They're kind of just flat right now. It's kind of just cycling around their open, which, futures, for those of you that don't know, they pause for a little bit after the bell, and they reopen at 4:15, and midnight is kind of their quote unquote open, because they do trade 24/5, with the exception of that 15-minute break at 4:15. So from the midnight quote unquote open, and even a little bit before that, you can see they're just kind of chopping around sideways. There's a little pop right here, but it's nothing much. So still flat right now. Back to not Thor. Man, I'm batting 1,000 today. THO, enter. That's what I want. Daily chart. 52 weeks. So what I'm looking at on THO, on THO, this is a stock that I noticed had a lot of recent insider selling. Last week and missed on earnings. So that was this down gap this day here and this down gap over here. It was recently downgraded. And it's in an industry that right now I don't think is that hot. It's they make RVs, recreational vehicles, motorhomes. And that's something that I consider a disposable income industry. And right now, we're not in that kind of economy where these quote-unquote disposable income items are really going to be hot. So that would kind of explain why they may have missed on sales and missed on earnings. Because right now, there's a lot of fear out there. Greed is not prevailing. And in a fearful market, luxury items usually don't do as well. So that would make sense for the recent sell-off. And even some of this over here, too. Going back to maybe the summer, fall months. But anyway, so there's a lot of negative press, a lot of negative stuff going on in Thor industry. So depending where this gaps to tomorrow morning, right now it is at 58.08. I will be looking at the opening and the low, and also this $59.90 $60 area, which is just below the trend line. Really would love to see this thing pop into one of these areas, either if it opens flat, pop into this area, or if it gaps down, pop into yesterday's open, and look for some type of rollover and fail. The next one I'm looking at is AYI, Acuity Brands. This one too, we go to a 52 week. You can see it's just kind of really has no direction. As of the past couple of months, it kind of has been downtrending. Big gap down here, big red day, and then kind of just down, up, lower highs. So it is downtrending. And if we zoom in here, what we can see is that it's today's price action. We have the involvement with this, the interaction with this macro trend line. If I pull it out, you can see that this is a long-term macro trend line from way back when over here. From what's that, 2011. It's been respected here and almost here, and these 2 days here. So it's definitely a valid macro trend. And we have this right here at 116.34. So again, depending on the market tomorrow, where things open up, I'm going to be looking for this to either pop into trend or pop into the 119 if it can get that high and fail. If this thing does gap down, I'll be looking for this to pop into this this 116.30 area, which was the open today. Keeping in mind that there is support beneath here at 115 and 113.87. And I'll be watching the whole numbers as well, because as you can see, 120, 119, 115, basically 114. This thing does respect whole numbers a lot. And the third one that I will be keeping an eye on tomorrow morning is our good buddy Tesla. Now, I know this stock is not for everyone. It is a pretty schizophrenic trader, pretty crazy some days. Some days it follows the market beautifully. Some days it moves to the beat of its own drum. So it's a stock that you kind of just have to watch every day and see what it's doing and make your decision that morning if you're going to be watching it or not. But there are some this daily chart. If this were a bull market, I'd be 100% bull on this stock. This daily chart looks really nice to me. Uptrended, consolidated, made a small pop, and now it's here. Now it's consolidating at highs again over here. Made a high over here at 370-ish couple of weeks ago, and now it's just in this consolidation mode. Excuse me. This consolidation mode right here. You can see the 353, 357. It's holding, and this put in this nice hammer candle here. And I would be looking for a dip to this support level, this trend line, and a ramp tomorrow. If this were a bull market. However, the kind of market we're in right now, I'm not so sure we're going to get that. It's definitely an option that I will keep in my notes. If we switch to the 5-minute chart here, what we can see is that it kind of just really tapped out hard at 366 even, right there, dead nuts 366. Did not want to get above it, did not like that level. And then it started to tail off a little bit after that. So it is kind of maybe downtrending, maybe flat. It is following the SPY, what the SPY is doing after hours. So again, this is one of the things that we'll see in the morning. The one thing that I did see that was very interesting to me on this, I have to pull up TOS for this one here. This indicator right here is something called 2-day VWAP. And this coincides with this level here. For those of you that don't know what the 2-day VWAP is, it's basically just what I say. It's the VWAP over the past 2 days, and it is a level that a lot of bigger money firms respect, and they use it in their trading as well. So it's something that I'm not really using on a daily basis, but I am experimenting with it to see how it works and how the large caps respect this level here, the 2-day VWAP, which I do have coded into Thinkorswim. I don't have the code yet for eSignal. I'm trying to get that coded. And when I do, those of you that have eSignal, you'll be the first to know. But I do find it interesting how the 2-day VWAP, which is, like I said, an institutional indicator, and the 366 basically line up parallel like that. So it's something that I'm going to be watching. You know, I wouldn't be surprised if this popped into this level here and failed tomorrow. It's really, you know, with the uncertainty in the market, I really can't make any trade plans definitively until I see what the market does in the morning. And there is one more play that I will be watching, Stitch Fix. As you can see here, this did report earnings today after the bell. The earnings were actually good. They beat EPS, they beat revenue. Where they missed was on weaker than expected user growth. Now, for those of you that don't know, Stitch Fix is a company that makes custom fitted apparel out of designer labels for the public. So if you want to get a Tommy Hilfiger or I don't know, Polo or whatever designer clothing brand out there that deals with Stitch Fix, you send them your measurements and they will custom fit these clothes to you. And when this thing first IPO'd, I actually really like the concept of the company. I'm one that believes that you should always appear your best and look your best and act your best, and part of that is dressing well. You don't have to dress to the nines, but you have to maintain your appearance and you have to dress well, and it's part of just overall self-respect. And not to get off on a tangent, but it is something that I do feel very, very strongly about, and I think it does have some tie-ins to trading and to goal setting. So what I will say about that is that I was raised to always dress the part and always dress like the person that I want to be seen as, and I want to be associated with and respected for. And my parents always told me that you can always be underdressed, but you can never be overdressed for a situation. You can always take a tie off. You can always roll sleeves up. You can always make yourself look dressed down, but it's really hard to dress yourself up when you look like crap. So, and that also speaks to a belief of mine that I have, is that you should not only dress how you want to feel, you should also dress to the person you want to become, the future affluent trader you want to become. And I'm not saying we have to be all stuffy and snooty and walk around in suits and ties and whatnot, but I do believe that taking care of yourself and dressing yourself nicely does speak volumes about who you are, and it just makes you feel good and puts you in a better state of mind. I personally, I love custom fitted clothing. I think that I do have a bit of an odd body shape. I have short arms. I have wider shoulders. I'm only 5'8". I'm 200 pounds. So if you can put that image in your head, short arms, wide shoulders, nothing off the rack fits me right. So if I have the opportunity to get something custom fit, I will absolutely jump at it. And I do have a couple of custom fitted shirts, not from Stitch Fix, but I do have a few custom fitted shirts, and I absolutely love them because they actually fit me right. I'm not readjusting my collars. I'm not readjusting the cuffs or the sleeves, and it's just, when something fits you right, it feels good, and it makes you feel good. So anyway, back to what I was talking about. Stitch Fix beat earnings. They beat earnings expectations. They beat the revenue expectations, but they fell short on weaker than expected user growth, and that's what really tanked them. And you can see there's this little weak pop right here around 5:30. This was the conference call, and it looks from the price action like the CEO was trying to talk the company up, and no one was having it. They put in a little lower high right here, and then just continue to sell off. So I'm going to be watching these important levels tomorrow. This 22.55, this 23.30, which was that little peak after the conference call. Being a newer IPO, it probably will respect whole numbers, so I will be watching 23 and 24. If it gets that high, I don't think it's going to have enough strength to get to 24. Unless we have a really, really strong day in the market, then it may be able to base, put in a higher low, and then start taking off. But at that point, the way it looks right now, I'm looking for some pops to short tomorrow. And yeah, I think that covers it. So like I said, tomorrow morning when the gappers populate, I'll be able to see what's happening in the morning. We'll be able to see how the market opens up, and then I'll be able to make my final watch list. And as I said earlier in the video, THO and AYI may end up not making the final watch list tomorrow morning, but I won't know that until tomorrow morning. Tesla and Stitch Fix probably will make the watch list, probably as side watches. I mean, unless there are some absolutely beautiful looking plays on the gap scanner. But that'll be seen in the morning. So I'm running a little long here. I don't want to keep rambling on. Yeah, I think I covered all the points I wanted to cover. So that'll do it for me tonight. Don't forget to check out in the description below. There's my Twitter handle at @TheTonyManji, and there's also a link to the to the service that that got me to where I am today, and that will continue to help me grow. TrickTrades.com. You know, especially if you're in another one of those chat rooms out there. Doesn't hurt you to come by, take a look, see what's going on, give us a try. The education here, the camaraderie, the everything here is second to none. And you know, those of you that are skeptics, once you take a look at this, I'm sure you'll see what I'm talking about, and hopefully see the light. So with that, I will be signing off for tonight. Take care, everyone, and those of you in chat, I'll see you then. Ciao.